Hi guys, so we ran out of time in class because of the fire alarm, so I just wanted to walk through a question that's much like the one in your homework, where it asks you to do the three of the four main financial statements. We've got a whole bunch of financial information here, and the first statement you always need to do is the income statement. I've also got the example up from the textbook. So it's always good, especially when you're starting to do something in accounting, is to have the example handy because you're not expected to know this straight off the bat. This is a good touchstone to have ready to help you answer the question. So the first statement we always do is the income statement, and we do that because this net income or net loss number will actually be needed in the next statement, the statement of retained earnings. So what I've done here is I've gone through my financial data and I've picked out all of the revenue and expense accounts because those are the things that show up on my income statement. It's for a time period. So for this specific question, we're looking at a month period of time. The company's just started. And so, let's see if I can make this bigger. So there we go. We've got a revenue minus our expenses. Yay, yay. We've got net income of $3,644. So I am now ready to go on to my statement of retained earnings. And just like the example here, whatever the time period is for your income statement, that's going to be the same thing for my statement of retained earnings. So it was for the month of June. So in this particular question that I'm working on, it's for the month of June, maybe a different time period in your homework question. So watch out for that. You kind of got to read the nitty gritty. So following this example, in this particular question, it is a brand new company because we started on June 1st. So that means our retained earnings or earnings that are left in the company was zero because at the beginning of the month we hadn't even really started the company yet. So most of the time there will be a beginning retained earnings account. So this was a brand new company in this example too. Again, it may be different. There may be a beginning retained earnings amount in your homework question. But for this particular example, there is none because we're just beginning the company starting in June. And the other thing is important here is the fact that we pay dividends. So we're going to add net income and subtract dividends in this statement. So that is important. So we'll just go down. We're looking during the month. We made $36.44 in net income straight off this income statement. So my beginning retained earnings. So I'm beginning in June 1st at the start of the month. And we've got zero because this is a brand new company. I'm adding my net income, which I'm getting from up here, $36.44. And I'm minusing the dividends paid out during the year. So this statement is telling the story of what earnings were retained into the company over this month. So the company earned on the owner's behalf $3,644. they got paid back $1,232. So at the end of the month, at the end of June, we're going to take our net income, subtract out our beginning plus our net income, which turns out to be the same number, subtract our dividends to get our ending retained earnings. All right, now with that statement of retained earnings done, it's time to move on to the third statement, which is the balance sheet. So the balance sheet is always done third because we need this ending number from our statement of retained earnings to pop into our balance sheet to make that balance sheet balance. So from our example here, in our balance sheet, we've got assets and liabilities. So let's start out with assets, what we have, what we can use in the future. Now, this is where the order gets tricky. For our expenses on our income statement, I'm not too picky about the order you put them in, but on the balance sheet, the order of the assets becomes really important. It needs to go in what's called the order of liquidity, and that means whatever will turn to cash or get used up first. Now, also remember, for our balance sheet, we're looking at a point in time, at the end of day of our time period. So in this case, it will be June 30th. Because our time period was for the month ended June 30th. Da, 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 da. First thing that's always listed is cash, because cash is the most liquid asset and it's already turned to cash. We love that. So we'll go up here and to the information, grab our numbers needed. Now, the next thing that's usually listed is accounts receivable, because that's almost as good as cash. So accounts receivable is another asset. It's almost as good as cash because our customers owe us that money. They'll soon come in and trade accounts receivable for cash, give us cash in exchange for their accounts receivable. It's what they owe us. Next, supplies. So in this case, we'd want to list supplies, something we have, because if you think about it, a bunch of cleaning supplies will be used up way before a bunch of equipment will be. Like if this is computer equipment, or, if we're a ski resort, that would be the lift equipment. We're not going to use that up anytime soon. But cleaning supplies will definitely be used up before equipment will be used up. So watch the order. Again, the example in the book is a really good reference. So I've gone up, got the relative values, and totaled up my total assets once they are listed in the order of liquidity. Yay! Now it's time to go on and look for our liabilities. Like I said in class, anything that ends in the word payable is going to be a liability. The only exception, or the big exception, is this one in the example, unearned service revenue. So that's exactly like we were talking about the liability of the gift cards for Tim Horton Donuts. So here we go. So here we are up in the data. We're looking for anything that ends in the word payable. These are going to be our two liabilities. This particular example doesn't have any unearned revenue, but if it did, it would definitely be listed in the liability section. So for this chapter, Wiley Plus isn't as worried about the order of your liabilities. Usually they are listed in order of what will be paid off first. So that's kind of the rule of thumb for our liabilities. Moving down to our stockholders' equity section, we're going to have common shares, and that is represented by the amount of the owner's investment into the company. So in this particular case, it will be $19,148. So that will be our common stock amount if you're American. Our retained earnings will be next in our balance sheet. And that retained earnings that will enter into our balance sheet will come directly from our statement of retained earnings we did right there. So retained earnings will be in this particular question, will be 2,412. Note on your question, it's a slightly different question, and everybody gets different numbers because it is based on an algorithm. Okay, so we got our assets listed in the order of liquidity. We've got our liabilities listed in terms of what needs to be paid off first. And then our equity, that common stock amount, is the amount of the initial investment from the owner of the company. And our retained earnings down in our equity section is from that statement of retained earnings. So those are our total stockholders' equity, our total liabilities and equity, and woo, 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 your answer is correct and you'll do awesome. If you're still having problems, you can go to Wiley Plus, the Wiley Course Resources, buy the textbook, and there's video walkthroughs of problems very similar to the ones you have. You actually have problem 5-1A in your homework. So hope this helps and have a great day. Bye.